Welcome back. It's time now to take a look at the top business stories. International companies bid for DEWA coal power development study. Al-Mabar to develop a $300 million luxury hotel in Jordan. And we speak to the CEO of Rolls-Royce live from London. The GCC markets ended mixed today and the UAE bourses ended negative. The DFM fell under 0.5% to close at 1,658 points. The property sector fell today as Emaar Properties and Arab Tech both dropped over 0.5%. Drake & Skull International was up nearly 1% as the company secured a $70 million loan for BNP Paribas. Emirates MBD fell 2%, DU lost over 0.75%, and DP World gained over 1.5%. 48 million shares were traded, valued at 68 million dirhams. And over in the capital, the ADX was down over 0.25% to close at 2,754 points. In the banking sector, Abu Dhabi Commercial Bank fell under 0.5% and Abu Dhabi Islamic Bank fell over 0.5%. The property sector also posted losses as Aldar Properties lost over 2% and Sura Real Estate dropped 1.75%. Dana Gas fell 1.25%. 24 million shares were traded, valued at 45 million dirhams. The Dubai Electricity and Water Authority, DEWA, is looking at coal-fired power plants to add to the Emirates' energy portfolio. The initiative has sparked international investor interest as 9 companies have submitted bids for a technical study to develop the new power source. The development is another step towards the Emirates' bid to diversify away from oil and gas resources to meet its growing energy demand. The study will include 2 stages, one that will involve an in-depth analysis of technology, coal types and infrastructure requirements, and the second a design plan for the plant. The successful bidder will be announced in the first quarter of this year. Government-owned Abu Dhabi developer Al-Mabar is planning to develop a $300 million luxury hotel in Jordan. The St. Regis Hotel is expected to be delivered by 2014 and will include 270 hotel rooms, 80 luxury apartments and 25 shops. The company's managing director, Youssef Al-Nuvais, said funding will come from the builder's own funds, banks in Jordan, and the proceeds of property sales. Al-Mabar currently has projects in Morocco, Libya, and in the Aqaba seaport in Jordan, one of the biggest projects in the region and an area that is one of the most important for the company. Corporate spending is on the rise as regional companies and their employees are increasingly using their credit cards. American Express Middle East has recorded a 16% increase in new card issuances, and corporate spending has risen by 30% since 2009. The spending power of individuals was lower than in previous years, highlighting a new tightened trend for corporate purchasing. New forms of purchasing has also helped this increase in spending, such as SALIC road tolls and payments to DEWA. The CEO of the company said that the UAE continues to be one of the top spending markets globally, despite the crisis. And for a detailed market analysis, we are now joined by Anil Sachdev, futures dealer at ACME MEDMCC. Welcome to the show, Anil.
Thank you for having me.
How has the Asian market reacted to Friday's news that the U.S. non-farm payrolls came in lower than expected, indicating that the labor market in the U.S. will take more time to recover?
Friday's job report showed a rise of only 103,000 jobs as compared to expected 150,000 jobs, and unemployment rate dropped to 9.4% compared to 9.7% expectations. Whole of last week was concentrated on this news and dollar was strengthening most of the week. Today we saw Asian markets dropping across the board with China showing a trade surplus lower than estimates at $13 billion. We are expecting the dollar weakness to continue and the labor market could take more time to recover to a tune of 5 years, where Banak is going to testify on the same this week.
The U.S. earnings season kicks off today with aluminum conglomerate Alcoa reporting fourth quarter and full year results. Profit expectations are high. How much of that is already priced in?
Alcoa starts the fourth quarter earnings report from today, and we are expecting better than expected profit rates for the same. Apart from Alcoa, we have Chevron, we have JP Morgan Chase and Intel releasing reports this week. And we are expecting markets to rebound from flat to lower market closes from the last month. Most of the attention was grabbed by the US jobs report, but now we could see that the earnings report could try to bring the stock markets up. The only factor which could stop a rally in the stock markets would be the Euro region debt crisis and any possible chances of Portugal bailouts.
The euro continues on its downward slide, hitting a 3-month low at the moment, mainly due to a lack of investor appetite for European debt last week. Where is the euro heading? Why is the dollar showing signs of strength when economic indicators don't leave much room for optimism?
Euro moved on to lows of 1.2867 after Portugal bond auctions last week did not attract much attention that was expected. This week we are going to see more bond auctions by Spain, Italy and Portugal, starting with Portugal on Tuesday and Spain and Italy on Wednesday. Germany and France are pressurizing Portugal to accept bailout funds by the European bailout fund, which was set up for such nations in debt crisis. And there is pressure on the euro currency to move even further down to 124.50 levels if such bailout funds go through and the crisis deepens. The European nations are struggling to finance their debts and raise money to pay the debts. We also are expecting dollar to move up against the euro as the European crisis deepens. But overall, the dollar is weak because of the lower job reports. And we could expect the weakness in the euro to continue as long as there is a deeper crisis in the euro area.
Thanks for your time, Anil. And in our fast financial news, Shua Capital is expanding its brokerage business across the UAE to overcome losses it suffered in 2008 and 2009. Shua's securities trading volume fell by half on the DFM and ADX last year. Investments into the brokerage arm is an avenue towards rebuilding the company's financial health. The company trades nearly 5% of all securities in the UAE. There are currently 94 brokerages in the UAE. And First Gulf Bank is planning to distribute 75 million shares as bonus stock. The bonus shares distribution represents 7.5% of additional shares to be handed out to shareholders. And rather than issuing new shares, it can use treasury shares, according to analysts, that will not impact the income statement or capital position of the bank. First Gulf Bank bought back 54 million shares last year. And after the break, we speak to the CEO of Rolls-Royce live from London about the reasons behind the incredible growth the car manufacturer has witnessed this year in the UAE and the Middle East.